Everyone want to stick with us versus herd. I want to talk about tomorrow, getting ready for the stock market and the Fed rate decision. And we're going to look at some charts. We're going to look at what this all means, and hopefully make some good decisions about what we can do, where we can see some opportunities. But I urge you to use caution. So tomorrow, the Fed is expected to make their rate announcement of 75 basis points. There is a 20% chance of a 100-point rate hike. So it's not out of the picture, but it's a low probability. Most likely going to be 75 basis points here, and that's going to be coming out at 2 p.m. Eastern tomorrow. So just be mindful, 2 p.m. Eastern tomorrow. If you're trading before then, there is going to be some obviously durable good orders, pending home sales. So there are some reportings in the morning, but if you're trying to trade the afternoon, just be mindful. The rate announcement is going to be coming out, and then after that at 2:30 p.m. Eastern, Powell's going to come out and say, "Hey, this is what we're doing. This is what's going on." Now, what I'm looking at specifically, obviously the tone. We need to know what the interest rate is going to be. Like, obviously, we're looking for 75 basis points. One of the other things that I'm looking at here is the Fed balance sheet and QT. They were supposed to tighten, starting in June, July. And what I do notice here, and this is as of July 20th, so they run about a week to 10 days behind in terms of updating this. There was a small uptick, not a big uptick in their balance sheet, but a small uptick. We were supposed to be unwinding, and I think hopefully some people ask questions, and maybe hopefully Powell addresses, like, why are they not doing what they said they were going to do. They said they were going to unwind the balance sheet. They are currently not unwinding it. Sure, it's down a little bit, but it's really not down all that much over the last, this is the year to date. We're still higher than when we started in January, and we really haven't been. This tick up is kind of worrisome. Now we did have a similar situation here back in May, where we came down, we ticked up, and then we came back down in terms of the balance sheet. So maybe it's something like that. I don't know, but I think that they need to address it. And then the other thing is, kind of looking at interest rates. Everyone's getting, freaked out about interest rates. And sure, I think the reason why people are freaking out is because they are raising them by a lot very, very quickly to get inflation under control. But I mean, if you look over the last 5 years, we're still historically low. Sure, this is going to put us, another 75 basis points is going to put us at 2.5%, which is where we were back in 2018 when the Fed tapped out. 2019, right, when the Fed started cutting rates because they got nervous, and then we cut rates drastically, during 2020. Obviously, the thing happened. So don't want to lose my monetization through YouTube, but that's a different story. But I mean, the thing is, like, what I'm looking at here is, starting here, we were at 0.25. So in January, we were at a quarter percent. And then in March, they only hiked rates another 0.25%, so 0.25%, so 25 basis points. So in March, we went up 25 basis points, which I was saying, like, hey, be more aggressive now. Instead, they really started off slow and then started getting aggressive now. Then they went from, okay, we did the 25 thing, we did 25 basis points, let's try 50. 50 didn't work out. We had, higher inflation reading, CPI rating. Then they went to 75. Then 75, they did 75 basis points, which we're now at 1.75%, which historically still pretty low. 1.75%. And CPI came in at 9.1%. So we're still, inflation went higher. So now they're expected to do another 75, and they're at this point, hopefully, I think they're hoping that this is the last 75 that they have to do. But I mean, who knows? Who knows? I mean, we're starting to see, Walmart last night, they issued guidance lower. They came out of the blue, said, hey, things are going, we have an oversupply of everything. And that's what we're starting to see, layoffs and a slowing in business activity. So hopefully, the trade-off is to crush inflation, you have to crush demand, crush business activity, and that will translate into layoffs and some things like that. But the interesting thing was, last month, Powell did specifically, someone said, hey, are you willing to settle for higher unemployment to get inflation under control? And he said, absolutely. He's willing for unemployment to go higher because unemployment, he feels like, he feels like he has some room to run, with a 3%, 3.6% unemployment, which is historically at the lowest of lows it's ever been, right? So, historically, you're shooting for like a 5% in terms of unemployment. We're like 3.6 and below 3.5, 3.4, 3.3, right? Unemployment. So he's like, oh yeah, I got like a percent. Some people get laid off. It's okay. It's worth getting inflation under control, which you do agree, but obviously, in this situation, you're gonna hurt somebody. You can't, not everybody's gonna get out of this free. There's gonna be layoffs with the slowdown and with prices, and you're already starting to see that in retail, where Walmart says they're going to have to slash prices and Target's are already slashing prices, which is good to get inflation under control. The only thing is, energy is kind of artificially being manipulated right now, especially oil, where we're releasing barrels out of the U.S. reserve to get gas prices down 40, 50, 60 cents, which at the end of the day, we're going to have to refill those reserves, but they're just kind of kicking the can. Hopefully by the time we have to fill the reserves, we've crushed inflation. That's what they're trying to do. Now, looking at the market, S&Ps here, we had we had a nice 10% rally, but we've definitely started to cool off. We had 2 red days in a row here. Friday was bad, then Monday, and then today is Tuesday. Tuesday was another. It was pretty rough. It was pretty rough today. So, but if we come back up, we're looking at the S&Ps. We're coming back up here to like 39.80, kind of like just been chopping sideways. Then they brought it down pretty low, but they bought it up at the end of the day. They bought it up pretty nicely here, almost over 20 points here. So they bought it off the lows over 20 points. And what we're looking at is, I'm not looking to get a big position or any, I'm just trying to make a little small trade before the Fed and get out, because we don't know what they're gonna say. Powell and what they're gonna be doing has been crazy lately. This is the main event. And then Biden came out today, says they're gonna probably take off some tariffs to get off of China to get lower prices on goods, but that's another story, So everybody's kind of working, but now we don't even care about tariffs. All eyes are on the Fed, because the Fed is controlling. Everyone wants to get bullish on the market. And this is the NASDAQ here, same exact story as the S&Ps. We ripped higher, but then we have, we've almost gave it all back here over the last 3 days. We had 3 days of massive gains, and then we almost gave it all back, except for we had a really nice bounce today. Now, the one thing that I will say is everyone was getting real bullish. Like, oh yeah, this is I don't know how many times on Twitter did I see, hey, this is a tradable bottom down here. This is a tradable bottom. We're finally getting a tradable bottom, which, we haven't broken this bottom and we've kind of bouncing. So I'm not saying it's not a tradable bottom, but I don't think, for me personally, I can be bullish until the Fed starts to slow down. If the Fed is starting to be super aggressive and keeps raising rates and say, hey, we're going to do 75, and if that doesn't do it, we're going to do 100, and we're just going to keep delivering the 75s and 100s. For me personally, I cannot be bullish as the Fed is raising rates. Right now all I see is short opportunity. So tomorrow I think is probably one of the most important meetings and Fed rate announcements that we're probably going to have, in the next 5 years. They've all been important, but I think this one's even more important because we had a very hot CPI reading. They're coming in with 75 basis points more, and we're just off the lows here, off of this quote unquote tradable bottom. So let me know what you think in the comments below. As always, stay safe, stay green. It's us versus herd.